Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, September 3rd. Wednesday marked a choppy session for Wall Street, with the major indices settling in mixed fashion following a late session recovery effort. The trading action came as traders digested volatile crude prices, a better than expected manufacturing reading, and the Fed's Beige Book report. In the end, the Dow rose 0.1%, while the S&P 500 and NASDAQ fell 0.2% and 0.7% respectively. The NASDAQ's underperformance was largely due to some warnings out of the tech sector. The technology sector fell 1.7% on Wednesday. Shares of Corning were pummeled after the company issued a third-quarter earnings warning due to lower-than-expected LCD glass shipments. The company cited an industry inventory glut. Semiconductor stocks fell 4.2% after Corning's outlook raised concerns about demand for LCD TVs, monitors, and notebook computers. The financial sector, up 1.4%, was an area of strength. Bond insurer Ambac Financial confirmed that it received regulatory approval from the Commissioner of Insurance of the state of Wisconsin to capitalize and restart Connie Lee Insurance, which will provide insurance for the municipal bond market. Lehman Brothers was once again in focus, with continued speculation that the struggling investment bank will be taken over or receive a capital infusion. The consumer discretionary sector, up 0.5%, outperformed, benefiting from a 1.6% increase in retail stocks. Staples reported a 16% year-over-year drop in its second quarter earnings per share, yet that matched Wall Street forecasts. Meanwhile, shares of General Motors rose 6.7% after the automaker posted a smaller than expected decline in August sales. In other corporate news, Coca-Cola is buying a Chinese juice company in a deal valued at roughly $2.4 billion. Shares of Conagra fell nearly 9% after the food company gave an earnings warning due to underperformance in its consumer business. In economic news, factory orders remained surprisingly strong, with the fifth straight month of positive growth. July factory orders rose 1.3% versus the market's expectations for an increase of 1%. Excluding transportation, orders were up 1%. The Fed's Beige Book, which is a collection of anecdotal economic reports from the 12 Federal Reserve districts, showed an economic slowdown in most areas. At the same time, most districts continue to report price pressures due to the elevated cost of energy, food, and other commodities. Wage pricing pressures were moderate, as the sluggish economic environment has allowed businesses to limit their salary increases. Crude oil prices traded in a volatile manner, falling as much as 2.3% before recovering to settle the day with a 0.3% loss at just over $109 per barrel. Commodities as a whole, as measured by the CRB index, fell 0.5%. I'm Pat O'Hare for Briefing.com. Thanks for listening and have a good evening.